Welcome to Charts and Coffee. Shout out to my Caffeinate and Dominate crew here. Shout out to my Sector Secrets Mastery crew. Good to see everybody. We are going to kick off today's session with a look at the economic calendar to remind us, yes, we had Microsoft and, well, look, we had earnings yesterday, big ones that we would think would be market movers. What happened? What happened? This is such a great way to recalibrate, to remind ourselves what is really moving the market. Did the market care? I mean, really, we had Walmart the other day. Did the market care? None. We had Microsoft. Did the market care? Not really. Why? Because macroeconomically, Walmart's news, Microsoft's earnings, they are not needle movers. They are trading events. They are volatility events. But did you see how the market just sort of swallowed it up? It was quicksand. Why? Because today we have a macroeconomic event. We're going to hear from the head poobah of the FOMC at 2:30. We're going to hear from the crew over at the FOMC. We're going to get our 3/4 of a point rate hike. Likely. We could get a 0.5 point, not as likely, but we're likely going to get our 3/4 of a point rate hike, which, cue the CME FedWatch tool. If you caught yesterday's video and if having an understanding from the standpoint of a rate of change, having an informed understanding as to what it is the Fed is going to do and how to measure it, gang, check out yesterday's video. I know it ran a little long, but gang, at this stage in my career, I really want you all to understand what is going on. I want you all to have the armor against gut feels and anecdotal type conversations and say, look, I don't care what it seems consumer behavior is mapping to. The main macroeconomic factor isn't whether or not we're buying cars, buying homes, going out to eat. That's just anecdotal stuff that we like to talk about. What is mapping to the market behavior? Why are we up? Why is Microsoft kind of being shoot aside? Think about it. When we look at where we're heading from the perspective of rate hikes, we have a clear picture. It actually looks like we're going to hike a 1/4 point less than we thought even 2 weeks ago. Equities are going to like that. And so when a lot of folks said, but Rob, what about consumer behavior? What about, housing? The reality that we live in, gang, is the reality of the Fed's design and of the Fed's opinion. And I know that may not be what we want to hear. It may not even be the reality that we live in, but it is the reality that we trade in. So remember, when I closed the door to my office, I remember that the world of the real is out there. In my trading office, looking at my charts, I am now in Jerome Powell's metaverse, right? We're not looking for what should be, what is. We're not looking for reality. I was just on Benzinga talking to the guys, and I love being on the show with them. We're great guys. And what we talked about was there's a reality that we all know is what we feel in our purses and our wallets. But then there's a reality that Jerome Powell is going to talk about. His reality dictates monetary policy. Monetary policy is going to dictate what we want to do in the markets next. So anyway, I thought I'd just mention that. That is where we are. Today's a big deal. I have not been paying 1 ounce of attention, frankly, to earnings. I like the pre-earnings run up or rally or sell off, and I like the post-earnings environment, but I'm not going to play through earnings. So for those of you wondering, if you're curious about a symbol that's within, say, 2 weeks or even 2 days to earnings, rest assured, I'm not going to be playing it. The window for me is far before that and maybe a day or two after the volatility. So that is where we are right now. And, I've said it for a while. And if it sounds like I'm hedging, I'm not. Have I said for a while that we're in a bottoming process? Yes, because calling for a bottom is arrogance, right? A bottoming process is truthfully how markets work. We just stop punching down to lower lows. So somebody asked me, and I appreciate the question. If you're out there, they said, look, does this mean you don't think we're going to see lower lows? No, I don't think we're going to see significant lower lows. Or better put, I think the 200 weeklies and the key sectors are going to remain above their weekly 200 exponential moving averages. And on the daily time frames, I do not believe that the data, based on what the data says, right, that we're going to reorganize into a downtrend. And remember this, if I were to say, you know what, come Q4, whatever randomly we might pick, we're going to head lower again. The first question I hope that my Caffeinate and Dominate crew, that my Sector Secrets Mastery crew ask me is, Rog, what data are you looking at that maps to that conclusion, right? And when pressed, most traders who are throwing ideas out there like that won't tell you because it's just sort of a gut feel, right? So I hope that we're trading with what we see, not even our minds necessarily. Oh, hang on one sec. The dog is freaking out. You want in, Pop? What's the matter? What's the matter, Pop? Come on. Oh my gosh. I don't know what was going on there. All right, she seems fine. Sorry about that. So no matter what, I got my little furry little VIPs. I thought she wanted in the office. She does like to hang out with us for charts and coffee. So I hope that makes sense. I hope that's actionable. And I was just telling the guys too, I know that somehow being salty, which I can be, and being a perma bear or pessimistic on the economy or pessimistic on stocks seems sort of oddly sophisticated. I don't know why that is. Gang, I'm going to tell you this. 3 decades in, optimists make money. The path of least resistance when you look to scale in the economy isn't to call for significant lower lows or this is the beginning of the end or the sky is falling. That is clickbait, right? Looking at longer term monthly timeframes is clickbait. Having ideas that may map out in the next 3 years is clickbait. What is happening now and what is happening in a opportunistic and optimistic way? Can we find something to do and control risk? And so when I see people fear-mongering out there, I will rail against that, gang, because it's not designed to help you. It's just designed to grab your attention, right? Which isn't really serving anybody but the person doing it. So there you go. There's Salty Raghee. I'm going to put her back in the box and we're going to take some questions. I see some great ones keyed up. Hey there, Sam. What is the reality with after hours options? No reality there, unless it's futures. If you're playing futures, there's some liquidity, equities, ETFs. I will not. No, it's just a no. It's a big cup of nope, my friend. Thanks for the question. I think a lot of folks are curious about that. I've noticed that there's some after hours options trading. Do I ever participate? The last time that I was active pre and post market, aside from futures, was back in the mid 90s. And some of you might remember small order execution system, SOS. Yes, for a very brief period of time, I was doing some of that SOS bandit stuff. Some of you might remember those days. And that was when we got level 2. We could see the market makers. We had a degree of transparency that retail traders had not had before. So no, and probably not since that time in equities have I even looked at that. Otherwise, pre and post, before 9:30 and after 4, it's futures or Forex for me, and mostly futures. So I appreciate the question. I won't touch options in that environment. It's often very volatile, it's illiquid, and that's just, to me, a risk concern. All right, next up. Hey there, Kathy. Longer term position. I'm looking at the bolts within XLP. All right, so let's jump in over there. So what I'm showing you all, gang, is my multi-chart layout. This is just a flexi grid on Think or Swim. And it's a really cool, easy way to put the tide, the index, of the sector in the upper left-hand corner, and then the stocks weighted in order in the next 11 cells. Now, if you like this many tiny charts, some people don't. You can use 9. You can use whatever number you want. But this allows me to look at the top 11 names, and oftentimes you really don't have to go past, say, the top 6 in terms of high concentration weighting. All right, so Procter and Gamble. Let's see, around 1. So what I'll tell you, Kathy, if you're looking longer term, so let's be on at least the same page. If I'm going to look longer term, say 6 months or greater, that's a weekly time frame I'm looking at. If I'm going to set up a swing trade, a few days to a few weeks, then it's going to be a daily time frame I'm looking at. So let's look at XLP, and we'll put the daily and weekly in focus. If I'm looking at XLP, we're well above the 200. Now, when people talk to me about the sky is falling and all the reasons, or most of the time, it's really interesting. The next time, including me, the next time, Rog, why are you bullish? Make me show you why. And it can't be a secret squiggle. It can't be, well, the grab candles are green, or the MACD is bullish, or a slow stochastic. No, it's got to be macro if we're talking long term. And if I'm bearish, which I'm not, look at all the sectors that are well above the 200 on the weekly. This is not the environment where we're looking for some massive drop. And again, why would we see that? What would be the catalyst? Of course, there's unforeseen things, right? But that's not really a trade, is it? Right? That's why I say that anything with a time horizon window of this could happen in the next, I don't know, 12 months, 18 months, 24 months, that's nonsense. That's clickbait. Be cautious of that, gang. When I look at XLP, very, very scrunched up, Kathy. Why? XLP is a defensive corner of the market. So on one hand, it could rise with risk appetite. If overall the S&P, NASDAQ, Dow go up, maybe traders will then also want to buy staples. However, staples typically benefit from, well, not risk appetite. I don't want tech. I don't want financials. I don't want healthcare, those kind of thoughts, right? So we hide out collectively as traders and investors in utilities and in staples. So I don't see a lot of clarity that I love on staples yet. In fact, it's really at an overbought resistance level. But your question was about Procter and Gamble. Same idea. If you want longer term, look, just because I do believe we're bottoming doesn't mean that I don't think we can't move lower. Again, bottoming means we're just not going to see a downtrend again. Could we see days that are selling off? Of course, of course. If we can get down to about 137 to say 132, Kathy, I would look for a longer time horizon, 6 months or greater on the weekly chart of PG. And I will not go longer than a weekly, gang. It's hard enough to get clarity when we get one candle a week, right? Which is why I say anything longer than that is just meant to be, a discussion point. It's not really tactical in any way, right? Who here actually looks at a time frame longer than a weekly to make trading decisions? Nobody I know. And frankly, when we get out to those very, very, very longer term time frames, remember your risk rewards are massive, right? The amount of heat you're willing to take on a weekly is greater than a daily. And the amount of heat that you'd have to take on anything greater than a weekly would be an entire month's range. And I don't believe most traders and investors really are calibrated to that kind of risk. All right. All right. So next up is, I do like the buy. I need a little bit more weakness, Kathy, and Procter and Gamble is probably your best proxy to XLP being the number one weighted stock. All right. Next up, Christian, how do you try to know if the trend will continue? Buying a pullback in a current uptrend or vice versa, meaning we can all know, all we can know, all we can know is we have a current trend. We don't know we don't know anything, Christian. We play probabilities. Trading isn't about knowing. Trading is not about certainties. Yet, when you listen to a lot of traders, they talk about what they see as fact. You won't hear me do that. Observation, know where we're right, know where we're wrong, and play the probabilities, right? I love that John talks about a probabilistic mindset. It got me looking at Mark Douglas's work again, a few years ago. And I totally recommend it. What is it? The Trading in the Zone? Is that one where he really dives into the probabilistic mindset? Annie Duke talks a lot about that. She's a professional poker player. I like that kind of mindset, right? Because nothing is a certainty, or as they say, it's called fishing, not catching. Same thing with trading. So I don't know, my friend. But if I've got an established uptrend with green grab candles, if I have the 8 exponential moving average over the 13 over the 21, the 21 over the 34, that structure throughout my career, throughout multiple seasons, decades of being a market participant, has told me more often than that, it is going to work, right? But we always need risk management because it reminds us that nothing is certain in trading. So you're absolutely right. But how do we know? You're not going to like the answer, Christian. We don't. But we can put the probabilities in our favor, right? We can follow the process. So as I like to remind my traders, it's process, not prediction. And when you force a lot of traders and analysts, you watch anybody on television talking about their predictions, heaven forbid anyone ask them about process. Well, why is that your conclusion? Crickets, right? Because it's just there to express an opinion, not necessarily backed by data. So I want you all to think about what is the data you're focused on that leads you to believe that the markets are going higher or lower. That would be, for me, the wave, the grab candles. Those are what I know probabilistically keep me on the side of, if we dip, we're going to continue the uptrend. But remember, that also means structure dictates strategy. So much of our time spent trading should be focused on structure. And by the way, if you're a member of any of our simpler trading rooms, I give you all the grab candles. I give you all the wave. I give you all the trade flags that help you do this, right? So I'm not telling you to go run out and buy anything. You don't. I've been giving this away for my entire career. If you're in the Sector Secrets Mastery, we have just the evolution of the trade flags. Down at the bottom, I have the multi-trend, which is the history of the trade flags, which is the history of the 8, 13, 21, 34 EMAs. That's what I'm measuring. That's what I'm looking at. The moving averages with a recency bias. That's what exponential moving averages do. So we don't know, my friend, but we can play the probabilities. I hope I make sense. Beside the VIX, hey there, Nick, are there any other market internals that I like to trade? I don't, Nick, I'm going to say something kind of strange, but it's the way I process it. VIX is just a futures contract for me. I don't look at it as, I know it's a market internal in that it's measuring certain things. I don't like market internals. The overwhelming reliance on ticks and trends and other things like that, I find to be incredibly misguided because they're not measuring the markets as they are composed. How are the markets composed? They're composed in high concentration weighting. It's about maybe a dozen stocks that move the broader averages. We know this because when you look at a breakdown, for example, of the NASDAQ, it's 6 stocks. There's 100 in the group. It's 6 stocks that come in, and I can't remember what the overall weighting is, but it's disproportionately weighted in favor of those 6 stocks. Take a look at the S&P. Your top 6 or 7 names, 500 stocks in the S&P, 6 or 7 names, right, are just about 20% of the weighting of the S&P. So high concentration weighting is the way in which the markets are composed. So until market internals reflect that, I don't look at them. And VIX is just a futures contract for me. Yes, there's some insight into risk appetite and risk aversion, but no, I actually do not watch, do not use market internals at all. Again, I'll always tell you why. If you use them, gang, if you're using them and they're part of your process and they map to productive, successful trades, it doesn't matter what I use, right? But if you're using these things, you're saying, Rog, I kind of noticed that too. It really doesn't work as well as one would think. Then think about the reason I don't use them, right? I'm never here to, I know a friend of mine used to say, don't yuck someone else's yum. You know, when the kids would eat and they go, ew, that's gross. And there's a kid down the way going, oh, I really like that. Don't yuck someone else's yum. However, I'll tell you why I don't ever put that on my plate. Okay. So I hope that makes sense. If you're using it to great success, awesome. Awesome. Stick with the process. All right. Next up is smash that like button. Gang, time is something that is incredibly precious. And I hope that the 20 minutes that we all spend here together is always, always, always useful. As a former Marine, Peter says, I love the salty rants. I just see so much garbage out there, and it continues to just, my mom was 40 when my father passed. Luckily, she ran into educators, newspaper, magazines, and local financial advisors with some integrity. If my mom wasn't set on a right path, I don't know where I would be, right? So yeah, I take this stuff really seriously because I think about if my mom were listening to me now, am I setting her on the right path or not? And I'm so grateful to the handful of people and her willingness to study. But these educators and even newspaper columns that she read from people with some integrity, without that, she'd be in a lot of trouble. So, I remember that. I was 15. I remember how much she studied. And thankfully, there were people with integrity. So, I appreciate that, Peter, but that's the way I process this. That's really why when I get salty, I think about if someone like my mom were out there right now, how can I make sure they're on a good path, right? Because people did that for my mother when I was very young. Anyway, and of course, my mom buys all my books. People say, "Oh, I love your books." Cool. It's not just my mom. Anyways, gang, I'm running over. Thank you as always for your time, and I will see you all tomorrow, same time, same station. Caffeinate and Dominate, gang. 2 p.m., 2:30 p.m. Eastern. We have our Fed Palooza. It is a caution day. Be careful out there. You don't have to trade that volatility. You can use it, trade up to it. You can trade past it, but you don't have to be in the mosh pit. Okay, the mosh pit's where we get black eyes and broken ribs. Be good to each other.